Oh, somebody caught it. He caught the Tonight Show.
Yeah,
Everybody,
I still watch that.
welcome to Bullish Bears. Welcome to Bullish Bears, everybody. Uh, Jeremy is in here. I'm Stone with Jeremy and Stone today, and streaming on Discord and live on YouTube. Bullish Bears, and we're watching the MES and SPY. I'm watching the futures today. I'll put up something else over there if somebody'd like, but we're just tracking price and showing everybody how we track price so that you can learn how to fish for yourself. We're showing folks how to fish and we're teaching them all sorts of stuff. We've got liquidity zones, we got 50% retracements. Man, we got the jewels, we got diamonds. We be killing it. So come on in and check us out, and we're going to just keep doing what we're doing right now as we track price on the
Heck
futures.
yeah. We just nailed that 50% retracement.
And
Like,
we did.
perfect.
Yeah, we did. Look, it's there. 50% retracement. Dun.
El Duno.
You see that?
All right.
Fit you so three touches when I said we had that third touch. If you'd seen this pull back here, if you'd recognize this and recognize those three touches, and sometimes you got to think about things a little bit. You got to slow it down and think about them. You could have grabbed, you know, that right there is 6.25 points on a 1 minute. So you could have grabbed 3 points in there using strategies that we teach you here at Bullish Bears. We had a measured move in the open where I used a little box to measure things. And we had a break of this channel, and we got a 2-for-1 reward on that all the way up the box there. These boxes were drawn way before it got there. You don't have to be you can be mathletic, but you don't have to be like a mathematician or a rocket science to do this. You can just be a little kid like me and use lines and shapes.
Just like you. Just like your coloring book. Stay
It's
within the lines.
just like a coloring book. Well, actually, you can go outside the lines a little bit in this.
That's true. Yeah.
I've got a chart up here of the MES. I got SPY over here in a 1 minute. I've got a 5 minute chart with indicators over here, and I'll jump it between 5, 15, and 2 hours. You see, this is my spider web on that. It's very colorful. This drawing set has this is only this week's range, but I can use that to find out what price is doing on a larger time frame. And I still use some training wheels. I got VWAP to 200 up here. This is the 20, this is the 15, this is the 8. On this little 5 minute chart over here, I usually keep it clean. And I only have one moving average. This is my main chart, actually. Um, and that one moving average is the 20 exponential moving average. Now we have to watch for a double top here. Price is coming back up to this area. So we'll be looking for a double top. Let's see if it's rejecting here. We've already had this big rejection candle. The thing that we have to look at is the larger time frames, because they're going to give us some indication of what's happening. And as you can see, since since the 6th of this month, we've been pretty bullish. A little pullback yesterday, and if we measure again, if we measure these things in TOS, we have what's called the quadrant tool, and I've customized that quadrant tool uh, to my satisfaction. I like the 33% and 66%. I like those thirds. Just like in music, we use thirds, 1, 2, 3, thirds. And we can see that price has already made a 50% retracement of that move since the 6th. And that's what this was the last few days. This was the 50% retracement. So it's made that retracement. And we're going to see now if we can hold these levels here from the previous few days. And then we'll make trading plans based on what we see and make our decisions based on that as well. I want to make smart decisions. We want to take our time and not be in a hurry. You should be so relaxed when you're trading that, let's say, like my Tradovate account, I should be so relaxed when I'm trading that when I see my setup, I can go and sign into my trading account after I see my setup. Take the time to sign in, get it all set up, because I track on TOS and I trade my futures on Tradovate. And be so relaxed that you just go in and you can log in and get your stuff ready to go and keep tracking your chart because you're building a spider web and you know where it's going to go. Or you have an idea where it's going to go. And if it comes your direction, then you're ready.
Just made a nice scalp off that reversal going on the way up there.
Good for you, Ricardo. Hopefully you guys heard that. We've got members in here making scalps. Let me make sure we hear everybody right. I still have to get my YouTube. I still have to get my audio correct here. I do spend about 8 to 12 hours a day in front of the computer, and not all of it is technical. Most of it is technical analysis. Not all of it is fixing stuff.
I just realized my mute button was on.
Oh, you're sitting there saying, man, Jeremy is being quiet. So we had to worry about that. Not worry about. We had to watch that that double top. This candle still. How you like that? This is why we wait till candles print. Think about this. When this candle started, what'd you say?
This is a 398.75 is our 50% of this current rising channel. That was the retracement target for the descending trend. Now it's the retracement target for the rising trend or channel. That wick is when bears started to sell into that. The bulls were taking profit there.
Yeah. See how green that candle was?
That old rule of three, man.
I'm telling you, that rule of three works. You see how red that green that candle was when it started going up, and we were looking at it hitting that area of resistance, and as soon as it hit that area of resistance, where price really did not like to be, the bears didn't like it there, whoomp. So, but we got a green candle, and what happens here is now young or inexperienced traders or traders that don't have their emotions controlled yet, and haven't learned the psychology of trading, which is extremely important, they will go in and think that they're going to go long, and then what happens is they become the wick.
Yep.
Now they're all caught here. Oh, some are probably hoping it's going to go up. Some are probably cursing that it didn't go up. Somebody probably threw their screen across the room because it didn't go up.
Yep.
But you wait for the candle to print. Now, that's a 5-minute candle, and I tend to trade on a 5 and the 1. I look at the larger time frames for direction. Look at this. This is right now. It's a 30-minute. This is really sideways. Is what we're getting is a range day right here. But don't worry. In a range day, this is a broad range right now. In a range day, you've got lots of price action, and if you're somebody that trades for a living, then you know you've got lots of price action in here where you can trade. The beauty of the TOS that I like is I can highlight a candle and I can see its range where it says range. Now these numbers sometimes change and all that, but if I smack my candle here, I can see my R is 475. That's 4 points, and 4 3/4 of a point is what that is. And so this candle here is 5.5 points. So like I said, if you're trading and you're using the 1-minute candle, or like some folks use, Jeremy uses a 5 and a 10-second, you could get this, right? You could have got that. You could have got here you could have sold this candle and gotten 3.5 on that, and picked up the 7 on that. So you'd got 10 points on a 1-minute chart in 3 candles in 3 minutes.
Over and over again.
Do you see that? But now you can't, let me just say this, especially those who are listening to YouTube. It's impossible. I'm going to use that word. It is impossible to learn how to trade and trade at the same time. You just can't do it because you're going to lose money. And if you're trying to follow somebody like me and you're wanting me to tell you where things are going, and I'm going to give you some directions, but I'm not here to give advice. I'm here to teach folks how to fish so that they can do this themselves. I'm not a financial advisor. None of us are. But if you can learn this and learn just some simple price action, the power of three, learn the three things that we look for every day: trends, channels, breakouts, channels, and ranges. And now of course you're going to have tight channels, broad channels, and you're going to have tight ranges and broad ranges. And you kind of have to use screen time to figure those out and study. You have to study as well, because this is kind of right now, this is kind of a broad range, but it looks like we're going to range a little bit today. But once you start being able to see those things and you can figure out, where the resistance levels are, because that's what the smart traders are doing. The smart traders sit at those areas of resistance and those pivots, and they wait for price to hit it, and then they sell. Because they're tracking price and they're watching it and they're saying, oh, it's going over here, it's doing this, it's doing that. Then if I set up over here, I can get in. Could have got there, captured all that. Sorry, I went off, but I want you guys to learn. I want everybody to be successful.
This will either be a 5-second bear flag or a setup for retracement back to that 399 level. Or sorry, 399.99 level.
Yeah.
400.
Now for options, this is crappy, isn't it? For your deltas.
Oh, this is crushing everything.
Yeah, but on the futures, we don't have delay. We don't have decay. I mean,
When I had my mute button, I was telling people, hey, I just closed 200% of my game spreads. I was out of it right on that last impulse, and now I'm just going to chill. Upgrade, downgrade. They can walk it around all they want. I can sit there and do this all day. All right, so let's see
All right.
what else I can do.
I was just checking on my spreads that I have. All right. Okay. Got one of them that's just hanging at the same price it was yesterday. All right. It looks like we're going to get a little break over here. So did y'all lose me?
I'm good. Gotcha.
Did we lose the stream?
No, we're up. Yeah, everything's going.
All right, because it said OBS had disconnected.
Weird.
Mm-hmm. All right, so I was going to explain. Let me go on a 1 minute chart here, and I'll explain it. That's why it's really clean. So dojis are important. See this doji here? I'll highlight them with the circle. Doji hammers.
Oh, now I might have lost you.
It's going to come back. Can you hear me?
There it goes. Yep, we got you now.
Yeah, it was the delay in that reconnection. So these are important right here. This doji, this guy here. Why are they more important than these? Because price is at their level. That's why. And so when I see these kind of dojis, I want to take it doesn't have to be perfect, but I'm going to take a shadow box and I'm going to draw across them, because that's an area where price has paused each time it's got there, right? So now we've got a bit of a piercing pattern. I guess that's what you call it, right here on the 1 minute. So we want to see if we can kick back up. But anytime you see dojis, look left and look left and find, or anytime you see price reacting in a spot, if you're not sure why it's doing it, look left and see if you can find something. For me, it's the dojis. That's what tells me something's going on. Another thing it is often it's what I call these in-betweens, where you have price that gaps or it comes together with two big candles. Those in-betweens become important as well. When we're in a bear channel like this, they become areas of resistance or support for the bear movement. We got another big wick there, but Hang on. Don't do anything. I'm not going bearish yet. Let me say it
Nice.
that way.
Nice trade, Ricardo.
Oh, I missed that one.
He freaking nailed the exact top of that wick, dude. That's badass.
Thank you.
That's excellent.
That was killer, dude.
I freaking love it. We're proud of you,
That
Ricardo.
is-
We talk about you all the time.
That is a man after my own heart. right
I
there.
know.
It's just like how you
That's a
flow.
bear heart. Yes, you did. All right. So
When you nail the top whip like that, dude, that is spot on. You are with it.
that spot. Beautiful.
Right.
All right. So let's see where we're going to go. Right now we're sideways again. We go back to the 1 minute. I just wanted to show that little thing about the dojis. And you see what happened when price was there? Always looked left. Always look left. We're getting some 1, 2, 3, last 3 minutes. Inverted hammer,
Tesla.
hammer. What's Tesla doing?
So even Tesla's setting up for a range day, so this is likely to be a range day.
Oh, I see
All
it.
over the market.
Yo,
I can't find. I can't reconnect to your stream on the Discord.
oh, I must have got kicked out. Hang on a second, y'all.
Ah, that's what happened. Okay.
Let's try that again. Sorry about that. I had a weird thing happen where all of a sudden OBS did something and it said that OBS was disconnected. I try to keep a look on the YouTube to make sure we're still streaming.
All right, I got one for you.
Yeah, there we go. Thank you.
Thank you.
Just got a message from one of our members asking if we could explain the liquidity zone one more time and how it pans across different time frames.
Okay. It's basically supply and demand. You wanna do that one? You want me to do it? Because I just go look for wicks. We just started calling them liquidity zones.
Yep. And we call them liquidity zones, but yeah, it's essentially we just look for wicks. And it's important to know where they are and which candles to look to for wicks because there's multiple liquidity zones,
Correct.
even liquidity zones in the middle of a trend. So, like I was looking at that 1 minute chart and that, 946 candle, that big doji, that big spinner. I shaded the entire lower wick of that thing and knew exactly where that liquidity was when I was looking at that bearish retreat.
Hang on one second. Tell me which chart you were so I can at least put that up. Tell me
Oh,
that
yeah.
again. Where
So
were
on,
you?
on SPY, 1 minute chart.
All right, hang on a second. Let me pull it up. I'm gonna pull it up over here where it's clean. We can tag team, baby.
There we go.
All right, 1 minute chart.
946 candle, and you'll see the liquidity zone off of that spinner doji. For you, it'd probably be the 945 candle.
Yeah, I got it.
And if you look at that retracement from that bearish breakover, that big red channel there, essentially this was telling us where the liquidity could be found after a 50% retracement breach. So as that price came down below half of that previous bull trend, we could go and ride the extension down on momentum to the bottom of that liquidity zone, and it certainly nailed it. In fact, it went a whole measure below it. So
You talking about this trend over here?
no, not in the pre-market. So I was looking at the trend. The bull trend started at
Oh, the bull trend. I'm
42,
sorry. Bull trend.
Yep. Ran until about 9:55, and then tipped over with bearish engulfing. As it was coming back down, I wanted to know where the liquidity was to be expected for that breach of the 50%. So by the time that 10 o'clock candle was starting to form, I was looking for the momentum to get out of that bearish position. And the bottom of the wick of that 10 o'clock candle hit the exact bottom of that same wick on the 946 candle. So that was a liquidity zone. That's a 1 minute liquidity zone. These appear on daily charts even. You can find the same thing. You just know where the liquidity is. And anytime you see a big wick on a candle in a strategic spot, just shade the area and run it all the way over to the right. And you'll see that oftentimes price will do different things at the top, bottom of that, as well as the middle of that zone.
Yeah, here's a good one right here on the 2 hour chart. just so you know. This liquidity zone right here, that's where all these wicks are. 1, 2, 3. I grab the bottom of that right there. I'll grab the whole wicks, but you can
Now, does it have to be a candle with a large wick, or can it be a full candle, like a?
it's got to be. It's for me. It has to be a Wiccan coven. It has to be more than one wick. It has to
Right.
be. It has to be several, at least 3. And you can see even just how far down these go. If I go over here, I've got a wick there. I've got a wick there. I've got a wick there. And what those wicks are doing is they're holding price from a certain level. All right. We've got it again right over here. And if I went on a smaller time frame or a larger time frame, a smaller one, I might find more wicks. So for me, it always has to be an area where there are plenty of wicks. Here's one as well that I pay attention to, right there. See that? And if we go over to the left, look, it's the top. It was hitting this area right there.
That's exactly it. And it's like whenever you see those a dead giveaway is when you see a wick and several other wicks. Look at the bodies. The bodies all line up.
Right.
So before we would show you, where all the control bars are. You get the high and low, or the open and close of the candle. Same thing, only with a liquidity zone, you're shading the entire range that's in that wick. So if you look further left from that, you'll find a control bar that associates with that range
Right.
somewhere in the past.
Exactly.
Will line up. So it's just a faster way to grab, an area of interest where you can find trades.
Right here. If we take this 5-minute chart right now, look at all these wicks. 1, 2, got that one, but I got 2, 3. These line up a little bit better together. You see how they line up like that? So that, to me, is an area that I want to keep an eye on, because if price comes back down to it, then I'm going to be watching to see if in context maybe it's going to break through, or is it going to bounce and come back up. So that's how I do it. Those type of things. Is that not? I don't want to confuse anybody.
That's exactly it.
So that's why I pay attention to wicks and hammers and dojis.
We've got a lot of stuff to put in writing, man.
Yeah.
That's a key note to know is where the liquidity is. So,
but you also have indecision right now too on a 15-minute.
Whenever you make a trade plan, be aware of where those liquidity zones are, but also know that you can adjust your trade plan accordingly. So, like if I'm targeting a 50% retracement on something, yet I see there's this further liquidity zone from a previous candle with a big wick. I know that if I'm trading a 5 or 10 second chart, I know that the momentum can potentially take it through that zone. So I can sit there hovering over that cancel all and exit button, waiting for whether this thing's going to bounce up and run off that support zone and bounce the other way, or if it's going to continue through that liquidity zone. Just gives you a way to capture, take your basic 3-pointers and possibly add a couple points to it.
So now, Stone, on the 15-minute SPY chart, would it be the top of the red wick and the bottom of the green wick?
Here?
Yeah, the top of the red one and then the bottom of that green one.
Well, yeah.
Would that be a liquidity zone?
Well, no, for me it's not. I'm not looking for me, this is right now is indecision. This is all indecision. We've got too many wicks. It's a 15-minute chart. That this guy is the one I'm going to be paying attention to more than anybody, because he's the opening 15-minute range. And also you see the opening, it's a doji. So for me, if I'm looking at this, I'm going to pay attention more to 1, 2, 3 here because of how they worked, and I would pay attention to these two on a 15-minute chart. Is that making sense? I'm not going to look for both sides of it. If mainly what I'm looking for in a liquidity zone is something that looks like this right here. See that?
Okay.
And then even using this is where having all the other indicators, you can see VWAP is right here. and it goes right through all those candles. So this gives me an idea that this is a good spot to keep an eye on. Price is going to react to it. It's going to do something when it gets there. So let's see. Let's do this and see what happens if I extend it over. Price can't get past it. This is the zone. This is the bottom of those 3 wicks over here. Price can't get past it. So this would be a supply zone here. A liquidity zone is going to be something at the bottom where price gets into. It's a supply and demand thing. It's going to be a demand zone, and that's where buyers are waiting to with their market orders to go long. And then a supply zone, which is going to be where price bops into and goes short, because at this point it's pretty much what, oversold? Is that what it is? Or overbought or something? And it hits that level and it comes back down. Now, did I confuse everybody and just hijack you, Jeremy?
Not me, but I'm still figuring it all out.
So what I look for is areas where wicks are and where price doesn't go lower. And that's what we're having right here, right now. This would be a liquidity or a supply zone. Jeremy, did I just hijack you, buddy? We must have lost him.
I stepped away for a second. Sorry. I couldn't announce it.
Very good. Okay. But wicks are important. Dojis are important. And I look for where that's why I always call it a Wiccan coven. No offense to you Wiccans. Because, to me, it's wicks and they're hanging out together and they're all hanging out in that area. And it's like, why are they wicking into that area? Why? And, you can, like I said, I don't think you can't extend these left. It pisses me off. But you can get a lot of things. So this is sideways right now, right? This is we have no Asian market yesterday. It's Tuesday. We have no Asian market overnight. So there's no Asia range for the MES, for the futures. And everything right now, we're just going sideways. And price is waiting for something to happen.
Get a 5-second gap candle.
And gaps are important too. All right, this candle's opening lower. Let's see what happens there.
This will either snap a bear flag over or this will pop up. I think it's a bear flag. We're looking for 398.25 extension on that. Sig just posted about Baba. I'm considering a play on that.
How do you get China ADR when they didn't have a Chinese market?
It's just flowing from our side.
Okay.
Even though China's in a holiday, doesn't mean Chinese people won't trade our markets on.
Of course. I see, City Blind Man. Some ugly stuff though on Tesla this morning.
Yeah.
This is definitely a sideways day. But there's lots of, again, even in a sideways market, like, if you were trading options in this, straight options, single options, you're going to get your butt kicked. I mean, you're going to be losing money left and right, wondering why you're losing money. It's because you're in a sideways freaking market. But in a sideways market like this, the beauty of the futures is you still have trades. Now, you might have to wait a little while on some. Like, for example, that's 3 points. That's 2.75. These candles are a little small, but you just wait for the next move, the breakout, or where it's going to go and follow along with it. Now, on breakouts, the one thing I've learned is that you only have breakouts about 5% of the day, maybe 10. You might have 3 breakouts in a day. And that's when you get 3 candles like this that just break out of a range. Most of the time, you're going to be, in a channel or a trading range.
I think did they have earnings? Let me see what's going on. Looking at J&J. Holy smokes.
Who is J&J?
Johnson & Johnson.
Oh,
Massive wicks on the 2-hour chart. Like a mohawk.
now I drew this box earlier. I'm at this point. Sometimes I don't even remember why I drew a box. I think I drew this because it was a in between. Did I do it on a 1 minute? Yep. This was the in between on the 1 minute. Okay, these were those dojis I was talking about. Remember, I talked about watching those hammers? Look at this right here. Hammer, doji, high wave. Hammer, little doji. This area right here I marked out. Prices moved from that area. On a 1 minute chart, this is a breakout. And we're coming back up to this area of resistance. We've breached this area right here that I had marked out as an in-between. And really it's valid, but it's now becoming an area of support. So we're coming back up to where we had some resistance. This could be the third touch, which could be a reversal. It means we're going to come back down. We're going to see. I know I'm using my 1 minute, my 5 minute chart as a 1 minute. That's that point of resistance right there. You want to see if it can hold this right here. It might come back down. But it looks like we might break out of this range. Now, what type of range are we in? Well, it's kind of broad right now. I could cheat right now. And this is a pivot, this green pivot. This right here this orange thing is a pivot. I can just say that is the range. And I'm going to take my little quadrant tool and I'm going to lay it down right there. This is how I'm measuring a move. So it's a 1 minute chart. I'm going to try to see if I can capture a 1 minute move. I'm going to see where we are. Let's see if it's going to break out of this range. This would be 1, 2. If it can't get higher than this guy right here, we're coming back down. That's what I would think. That's one scenario. Potentially. I got a spinner here. Climbing out of that area. This is my next level of resistance right here. You can see how it lines up with price fell, and this is your in between from that. Oh, go ahead. I'll just do this. I'm just going to gray it out right now. There we go. Gray price line. I know what that is. I color code my stuff. So here we got, touching this area, come back down. Touching this area, come back down. Here we are again. Are we going to hold it? Are we going to go? Is this a pullback? Let's see. More than likely, it's going to push back up. Doesn't mean you follow my trade when I say that. And if you're on YouTube, you're delayed. Don't follow it.
Tap that $400 bill again on SPY.
Yep.
Magnet.
Where's that area? I just drew on SPY. Did I do this on a 2-hour or a 15-minute? We're in that area.
Yep.
There it is. That's that little, I must have did it on a 15-minute. That's that area.
Being able to butterfly my DMV position.
Mm-hmm.
So I took profit on it. Next thing.
Also, notice this is a previous VWAP. I call this a previous VWAP. This is actually overnight or after hours VWAP. Then it comes back up here to the Globex, and that creates a zone as well. But that's a magnet for price right there. Now we've got another one down here where it bends. I call these VWAP bends, And this is just another way to track price. I use a lot of different ways, but I noticed these bends right there. I noticed that when they happen, price is attracted to them because it's a previous VWAP. That's VWAP is volume weighted average price. It's not an actual. It's not a moving average like these guys. It's a little different and actually pretty much stays the same on most charts. So you can catch little bends and different things and crinkles, what I call crinkles, on different time frames. But for the most part, when you get like a previous day's VWAP, like I would call this the previous day's VWAP because it ended there, even though it's after hours, you'll see that price reacts and with them and interacts with those lines. So am I saying that price can fall from here to here? No, but I'm saying it's a possibility. There's a range there. If I see that price is flagging down, and on a smaller time frame, then I can say, okay, well, price is starting to flag down. If I get here and I say, oh, it's bearish. Well, that's 398. Well, then I could capture, $1.70 or $1.65 move because I have this VWAP down here, and I know that price usually moves between pivots, and VWAP is a pivot. These daily VWAPs and previous VWAPs. So I make my trade plan. Oh, look at that! It's coming down. Awesome. Okay, let me go get this ready, and price is going to hit that, and I'm going to grab it right there, and I'll be out. I'll get in here, depending upon how it looks, and then boom, you're out. And using those VWAP bends the same way you can use pivots. Price will sometimes go between the pivots like this, and then you could just, when you know it's where the pivots are, it's just like in a trading range. You set your sell order here, you set your buy order here, you set your sell order here, you set your buy order here. But you got to know the rhythm of the market, you got to know the waltz, and you got to have some screen time. That's not going to happen if you're a new trader. Not that quick. Remember, anytime you see somebody do something that looks easy, remember, they've probably been doing it a long time. So it's just like, Jeremy went and saw that concert with the guys wailing on Van Halen. And it was fun. It was great. I looked at it, I was like, yeah, that dude's having a blast. And the band, it's great. Everybody's screaming, and it's, ah. And if you look at the guy, it looks like it's effortless what he's doing. Well, you try it. You try it, and you try it, and what's going to happen? Well, you're going to find out real quick that it takes a lot of repetition to get to that point. So that's why we study the market. And look, we're sideways. This is a risk off day, I would say, for single options.
It's great for spreads though, man.
Yeah. Okay. Spreads are great. Oh, you see that? The butterflies and the spreads, but we know single options would suck. So if you're in an account and you can only go single options, I can't give you any advice, but I ain't messing with it.
Well, I'm trying to put together some materials to basically tell the type of analysis you use to adjust existing options positions. So I'm kind of practicing with it to make it perfect, so I can put it down in writing the way I do it. But there's a time where you can make a butterfly work really well. There's a time when you can't. And though I've been successful on a couple butterflies recently, especially with Amazon, which killed it, AMV is just not in the cards because it got some volatility. I couldn't reasonably sell credit spreads to capture enough profit to really be worth my time to convert an existing call spread position into a butterfly. But I was sure as hell able to take 200% profit on it. So, there's a time where you just kill the trade. There's a time when you adjust the trade. Today is a good example of that.
Awesome. I'm typing up something for the social thing. Using rectangle tools to draw levels helps clean my chart up.
So there are some bearish setups in the market.
Alrighty then.
MMM, and then also start.
So we're not able to break this up there, it looks like. Let's see. The tweezer top looking thing there on the 5 minute.
YouTube, they're saying they can't quite hear me. It comes through clear on our Discord channel.
That
Sorry, guys. I'm sitting there talking. They can't hear you because I had muted the thing, and they can't hear you at all.
okay.
Probably. Or it's still soft in OBS. I haven't figured out. I raised the volume yesterday, but
Right.
that's one of those things I'll have to spend the off time out of trading hours to fix.
Get there.
I got you cranked, and I even have it off my ears so it doesn't blow me away if somebody else talks.
Yeah, it gets pretty hectic sometimes when it gets out of balance.
Yeah, well, at least it's not like we're only dealing with Restream.
Yeah, that's
The
true.
Restream thing was just freaking awful.
Oh, indeed. And it's funny because I mean until they experience what we've experienced with it, it's going to be kind of a conversation that keeps reoccurring. Hey, why
Oh.
don't we using Restream? Well,
It sucks.
why do you hate it so much? Because it sucks.
It's cumbersome. I mean, I remember people shutting down. You couldn't, they'd try to stream and then they'd have to shut it down and then we wouldn't have a stream.
Yep. Yeah, it was ridiculous.
And when you're trading and you're trying to teach trading, you want something that's light. You want to be able to run and not get bogged down by something.
Right.
We are definitely just sideways right now. So, and ranging. But you
I'm
can see,
looking-
look, we actually broke that level. We're trapped right now. We've trying to find support on the 1 minute on this this resistance here. Let's go look at it at 5.
I'm flipping through all my large cap charts, kind of looking for setups, but so far the only one I've found that looks interesting to me is look at the chart on Mastercard MA.
Okay, we're getting ready to do something here.
Yeah,
MA. Let's go look at MA.
if you look at that, I mean they had earnings pre-market it looks like, but look at that gap down to 349 in the pre-market.
Man, they're like flat, huh?
It's flat now, but I think that was probably the source of some of those trading halts. And there's a couple others that were having similar issues, but MasterCard, that's a big stinking range.
Dude, that is, I tell you what that range is. That is $91.61.
Huh?
That's
And-
humongous. What the hell happened there?
It's just volatility. Wait, are you looking at MasterCard MA?
Yeah, right here. 5-minute chart.
Mike Alpha?
Mike Alpha.
Huh. It
MasterCard.
looks different. It looks different.
What
on my
what time frame are you on?
5 minute?
That's
Yeah.
my 5-minute right there.
Huh.
See, there's the big wick. All the way down there. Pre-market, I got this right here. I got no volume, it looks like.
It's flat. There's like no volume in it, but that's a crazy drop. And then all the way out to a 2-hour chart, you can see it hit a previous support level. And I'm intrigued to maybe
By the way, UVXY is below its 52-week low, and it's continuing to drop. So is the dollar.
this is interesting.
Dollar's at a pivot. Well, let's go look at the chart. Oh, shoot fire. I forgot. All right. There we are. Is this the 5-minute? Yep. 1, 2, 3, 4. So this is an attempted breakout of an area. We're trying to break out of this candle right here.
Burning up that 400 chain again.
Mm-hmm.
Here we go.
This is what we've been waiting for. All right, this is what I've been waiting for. I want to see what it was going to do. Everything's been looking bullish to me, Jeremy, and I and everybody, not you, but the when I say everybody, I meant the market hive mindset is keep saying bearish, and I'm like,
I don't know.
And
No.
I keep making money going bullish because I don't agree with it. Yeah, I don't. I'm just trying to trade the chart, and that's why I have come to the point that I don't pay attention to news except market econ events. That's the only thing that I pay attention to with the futures, because it's just like to me, and this is me, guys. I'm just giving you one perspective. I I like options. I have some debit spreads, but I like those best. But the singles I hate, because I would get in and I'd sit there and nothing would happen. And so, with the futures, I can trade and make a living trading. And they move very well. And I don't need to put volume on my chart. It's like, well, volume's important. I'm like, I don't need it. It's regular trading hours. It's the futures. It's the S&P. It's gonna move, you know. And I just follow the candles, and then that's one less thing that I have to look at.
Exactly.
So, and then finding, like I talk about the waltz, finding the waltz, channels, range, breakouts. There you are. There's one. There's range. There's a breakout.
Like finding your easy button.
Well, it is, and the thing is when you start realizing that the market does move in threes, and I'm not on some hype with that. This is a fact. Go study it. The market moves in threes, and
Sir.
and so you have all these different waves of three touches. You move in threes. We get a third of the move. That's one 2 3, 33% each, or 33 point whatever percent makes 100, but you know what I mean. And once you can get that, and that if price moves in a breakout, when it moves in a breakout, there's probably going to be a retracement, right? What's that retracement going to be? Well, it's going to be at least 33%, probably 50%, possibly as far as 66%. Man, once you know a channel breaks and that you can catch that channel in a retracement, it's going to change your life, because you're going to start seeing things. But what you got to do is you got to deal with the psychology. You got to deal with the psychology, because you're dealing with money, and the market's different than anything. If any job you've ever been in before, it's different. And the things that you do in regular business, when your boss comes in and says, "Okay, Stone, you got to make something happen. We need to get that sale out there. Go out there and make it happen." Well, with the market, you can't make it happen. You have to follow and let the market lead. That's why I call it the waltz of the market, because it's 1, 2, 3. Let the market lead. It has to tell you where it's going. If you're dancing with somebody, and I said this yesterday, and you're supposed to be leading and they're trying to lead you, it is a fight. It is a struggle. Somebody's going to get their toe stepped on, and it's going to hurt, and there's going to be pain. You go against the market and you don't follow its lead, there's going to be a lot of pain. And that pain's going to come in loss of money. So before you trade, make sure you understand how it works in a way that you understand it, so that you can get in there and make trade plans that are intelligent, that are actual plans that the market is going to tend to do. And if you follow the market makers are all looking for a 2-to-1 risk reward. That is the standard risk reward. So those trades are going to be a lot, they're going to stick out to you more once you learn that type of you learn that waltz and the 1, 2, 3, and how to measure those moves. So there's lots of stuff you can do trading wise to make a living trading the futures, and some options that you don't get told. It's not investing. It's trading. So anyhow, that's where we are. See where price is going to go. I love this stuff.
Let's see here. All right, still rocking my Tesla. I got half that position butterfly, the other half is open. earnings play on that one. Earnings after hours on Wednesday. That's tomorrow. So I'm looking to probably profit my open position today and maybe tomorrow, depending on what we end up doing. And I'll just let the butterflies do their thing. If it runs up to that level,
Let the butterfly do
dancing.
that thing.
if it doesn't, I've already captured profit, so I don't have to give a damn.
You don't have to give a damn. All right, stretching the candles out. Sometimes when you stretch the candles out, they look different. This almost looks like Beaker, but he's not. Because beakers don't have wicks on the bottom, by the way. The Beaker, the range bar that I look for, usually has a flat bottom or a little to no wick. This is a little larger than I like to see.
We gravitated back to that $400 level, and that's that
Mhm.
importance of, in spite of price action setups, in spite of what happened with a measured move,
Mm-hmm.
when you have significant round levels, like we call them, the near 100 or whatever, you get to that 400 level, and it's this kind of price tends to gravitate towards it because people are watching for that level to hold. That's the crucial level right now. You know, when you have a whole 100 level, it's just kind of an area of interest for
Absolutely.
both sides of the party.
Did we just break the 400? Is that what we just did?
We did. So
Okay.
we're at $400.50 on SPY, and the 5-minute 200 period is at $400.20. So that's kind of an important area to hold. If it holds today with the range day,
Did you say 5 minutes?
we could,
Yeah.
yeah,
Okay.
we could see follow through with this, but take a note, zoom out on that 5-minute chart, and just kind of tell me what that pattern looks like to you.
Zoom out. How far out?
Like a double top. 2 days, that's all you need.
Oh, yeah, like a double top.
So if you compare that to an SPX chart, it looks like the SPX takes all the pre-market data out of it.
Yeah.
What
Well,
else does it look
yeah.
like when you take the pre-market and after-hours data out? So like if you go to an SPX chart with a 5
Pop it up for me because my SPX, all mine are going to have pre-market
oh right.
and after hours. So I can't do that. But if you could pop one up, we could see it.
So this is what it compares to. I'll put it in the chat.
Thank you. Ooh, good man.
There you go. And effectively, what you get is a completely different scenario. So, like, suddenly SPY looks like a double top, SPX doesn't.
SPS goes like a cup and a handle.
Exactly. That's
Exactly.
exactly
You
what I'm
see,
getting at.
and what you're doing right there, Jeremy, is not only you're cross charting, but you're cross charting along the same index.
Right.
The same index. We just started I just noticed we started a new 2-hour candle here. And the last one closed above the $400, above the pivot.
Yes, sir.
But also, I look for, do you ever look for, I don't mean to interrupt, do you look for that when it hits that $400 level, that whole dollar level, especially in ETF, don't you look for a pullback after that to come back down maybe into the previous dollar level? For example, would we look for a 399.70 before it pushed back up, or a pullback that far back
Right.
down?
Typically, we would see, once we break through a key level, we would see it come back to test it as support, and that's very common. And sometimes it'll give you an extension. Sometimes market makers will sell into that real quick to push it below, and do a little stop raid, we like to call it. And knowing exactly where that support level is key. So yes, that 50% of that exact trend that took us through that 400, where you see the accumulation there, right at 399.70 on the penny.
On the
So-
penny.
You can almost expect that. Doesn't mean it has to happen. It just means that's the likely scenario. So as we're breaking the angular support of that rising channel right now, that's the setup on hand. But be noteful and mindful of that $400 level, because sometimes you'll get a quick fake out. It won't reach the 50%, but it will reach the 33, which is right at $400.
That's right. It will reach the 33.
and then they flip it.
Mm-hmm.
So they'll buy into that.
Yeah.
If you were to watch your volume profile on the ES right now, you'd probably see exactly where those levels are.
Yeah. The volume profile works really well on the ES. I don't keep it up on the on TOS, although I do use it, but not the way I use it on Tradovate.
But
I do.
Right.
Yeah, it's a different animal, total different animal. I get my levels on the volume profile on the. Okay, this is what I was looking at. I was looking at this guy right here. I said, oh, let's see what happens with him. Now we've still got almost 2.5 minutes on this candle. So here's the thing. What we have here is 1, 2, 3, 4. We have 4 bull bars, 5. And we have them in a bit of a tight channel. Okay, this would be a breakout or a tight channel. This guy has already pulled back below this candle here. So we want to see if it's going to hold, close as a hammer maybe, or if it's going to flush out, or maybe do another pullback. It could do those things, or it could push higher. It could just give us that little bit of retracement I was talking about that we're looking for over here on SPY, back down below the 400, although it looks like it's wicked into a pivot there. So that might not happen. Multi-charting is great because you can really go and get a good look at a broad picture of what's going on. And another analogy I like is, see the forest, see the trees, find the root, branches, and leaves. Because you have a forest and trees, but you have to break it down to different time frames to be able to find its root, which is probably going to be the lows, but to find its root, and then the branches and the leaves. Well, the branches are your price ladders, and your leaves are your tops. That's where they're going to be, right? So you have to be able to follow on different time frames to get a good idea of sentiment. And if you go look at, that's why a lot of times I go back to the 2-hour. Now, if we look at this 2-hour chart, and we talk about wicks a lot, well, this is a 2-hour chart with 2 wicks I'm looking at. And why am I looking at them? Because they basically slammed into the same area. This guy is giving us a bullish sense. We're above the 20 moving average. EMA, that's the EMA. Let's go back to the 5-minute chart. Look how far we are above this moving average. Look how price hung out around it before the breakout. So now what we have is this moving average. So we could see maybe price come back down to it. But when I see red candles and we're that many green candles and we're that far above the moving average, I don't feel bullish. I don't think, bearish. I think this looks bullish. And we could get another leg up equaling this one right here. So let's mark that out. Let's keep that in mind for the future. That move could have another move that equals it all the way up to about 40.58. I love it when he texts me. Excuse me. My buddy. Real quick, music buddy.
I'm just putting it up in chat with what we're seeing with SPY versus SPX there. That's just a contrast of what can oftentimes confuse you in the market. So it's not like it's designed to. It's just a matter of you need to take and look at a few different perspectives on the same index. So if you were looking at the ES for that matter, you don't have the gap that you tend to have on SPY from like 8 p.m. to 4 a.m. So you can see a little more smooth price action. Well, it probably more or less would resemble a bull flag in this case at the top of the trend. So the ES is generally going to look bullish. SPY gives the impression of a bearish reversal here, whereas you take SPX and omit all those after hours trading zones So you got two charts on the same index that show bullish, but one of them shows bearish. Well, options traders on SPY, they're going to be confused and get screwed on this likely. Whereas if you look at the indexes and also the ES, you're going to make a killing on that price action. So it's
Really kind
Yes,
of cool
sir.
to put that in perspective.
Yes, sir. It is cool to put that in perspective. All right, let's look at this over here. We have a potential double bottom. Now, this might be called the micro double bottom. Some double bottoms we look for have that classic double bottom look. You know, this is almost a triple bottom there. But some double bottoms, and if you study price action, you'll hear that term for smaller intervals. Like this is not a double bottom. Obviously, it's failing. So you'll get that for smaller intervals. Some double bottoms can be simple as 2 candles. And so, I encourage folks who are listening to my voice right now to study the double bottom. And there's a lot of material out on that. Just you can find it. We have some here. Most of what you're going to get from us here is going to be live in the trading room. I've learned most of what I know trading with bullish bears exclusively. And it's been the only group I've ever joined, and it's the only trading community I've ever joined, and my education comes from here. So, but these things are just, you just got to keep watching them. I got a little distracted there. Sorry, guys, lost my train of thought.
This is that raid we were.
It happens. I lose my train of thought.
It's a raid. Cheese it.
Cheese it. See, okay, so what happens here? We're back down to the 399-ish. Now, your bears, inexperienced bears, they're going to be jumping on top of that. I'm waiting. Now, somebody who's real experienced could have jumped on it and got a scalp. But for me, I'm just going to wait. I'm slower. I move slow, y'all. Yep. I'm in the South. I'm in New Orleans. We are the city that cares for God. We are laid back. So I've had to tap into my laid backness and trade that way without all the, hustle and bustle, because the hustle and bustle doesn't do anything except screw you up. Goodbye to YouTube. YouTube, we appreciate you. Why don't you come on over and see us? Come work with us. Come check us out. And, get in the room with us. Learn a little bit about what we do here. We have a Discord. I'm going to show you that right now. We have a Discord. And you can. I got message I got to go look at. And we put up stuff in here. We talk. This is our voice channel right over here. You see, we're in voice. We have people that are probably invisible that you can't see. I know they're in there because they'll type and say, "Hey, I heard that," but you don't see their name. But
Right.
we've got a lot of great folks. Corgi, she's right around here, around New Orleans, and want you to come join us. See, the most important thing is we want you to learn how to do this for yourself. Because if you can trade, you can start small with the MES. You can start with penny stocks, and you can learn price action. You'll be able to start managing your own money and your own retirement funds, not being an investor, where people buy low and sell high, or the buy and hold. I mean, because we can go down. We can be bears or we can be bulls, and bears and bulls make money in the market. Pigs, they're greedy. Pigs don't make money in the market. But come on, we'll show you how to be a bullish bear. All right, folks, we'll catch you again next time right here tomorrow morning, and we'll see you. Bye-bye. Oh, click like, subscribe, and ring that bell and tell your
There
friends.
you go.
Bye,
I know
y'all.
they can't hear me, so
Yeah, they can a little bit.